Welcome to the Wall Street Crossover Show, brought to you by Tip TV in conjunction with our sponsors, Admiral Markets. It gives me great pleasure to introduce Mr. Darren Sinden, market commentator for Admiral Markets. Darren, how the devil are you, sir?
Very well, Moose. It's been a day of mixed emotions with all the excitement around the
cricket.
Well, both the Bank of England's Super Thursday and the proceedings at Trent Bridge. So it's been a very interesting morning, to say the least.
Magnificent. Well, we are a market show, so let's talk about the cricket. 60 all out. Fantastic news.
Yes, I can't believe it. I don't want to, crow too much because obviously we've yet to bat, but it does set us up potentially for a series win at Trent Bridge. Could be famous last words, but we'll keep our fingers crossed for that.
Absolutely. Okay, well, let's kick off with data released over the European session. What's caught your attention this morning?
There's plenty of data to get our teeth into, but if we start with the first slide and the Australian unemployment rate for July, rising to, obviously out before the European session opened, but rising to 6.3%. The forecast was for a read of 6% against the prior figure of 6.1%. So though the currency took it well, I think that's a note of caution there for the RBA. They are trying obviously to continually weaken the
currency,
Aussie dollar.
Yeah.
But at the same time, well, you have to wonder, is that really going to be helping the underlying economy too much? So some cause for concern there, I think, going forward. And then into Europe proper, the German factory orders for June came out. Now, we had some disappointing Italian factory orders earlier in the week, but no worries on that score from Germany. June number up 2%, 10 times higher than the forecast, plus 0.2%, and obviously substantially ahead of the prior read of minus 0.3%. So a very strong figure, but I would just sound one note of caution. I think if you dig down into the data, you find that domestic orders declined by 2%. Now, the ECB is obviously trying to stimulate the internal economy in Europe, as well as making exports cheap through a weak euro. So yes, the German export engine is running very strongly, but it won't buy many.
But not from internal.
No, I'm sure that won't go unnoticed in Frankfurt, and they'll be wondering what's going on there.
Understood.
Now back to the UK. First thing this morning, we had the Halifax House Price Index for June. The month-on-month number came in at minus 0.6, so that was well below the forecast growth of plus 0.5% and the prior read of plus 1.6%. Year on year, house prices in the UK, according to the Halifax measure, have grown by 7.9%. That's down, though, from the previous reading of 9.6%. So slowing, although it slightly conflicts with the nationwide data that we had again earlier in the week. And then literally before I posted my slides over, we had the key interest rate decision as far as Europe's concerned for the week. The Bank of England MPC rate decision, unchanged, no change to rates and no change to QE. What was a surprise, but in the wrong way, is perhaps for many anyway, it was the voting. Had been 9-0 with people sitting on the fence. The expectation had been for
7-2, 6-3 maybe.
Yeah, and it came in at 8-1 with only one dissenter. So that's been seen as more dovish. Alongside the decision, there's a raft of other data, but the one figure I will pick out of that, or have picked out of that, CPI for June at 0%.
Zero. No inflation.
No, and they talk about core inflation being running around 1%, which means below 1% if you read between the lines. So seemed to be dovish by the market, and cable sold off quite sharply on the back.
Understood. Okay, let's move across the European movers this morning.
Okay, I picked out just two as ever. The first one is Metro, that's MEO in Germany, one of Europe's biggest supermarket groups. A tough quarter for Metro, trading 31.22, up 5% though, before we came on air. It was tough because of headwinds in Eastern Europe, but they still managed to post a profit of 115 million euros versus a 63 million euro loss for the same quarter last year. They maintained guidance for the full year, which is for a small beat over 2014. I think overall the market's very pleased. I suspect there might also be an element of short covering there on that bounce.
Yep.
And then going a little bit further north to Denmark for Novo Nordisk, that's ticker NOVOB in Copenhagen. This is a drugs company for anyone that's any doubt. Trading around 404 Danish kroner, 480, in fact, down 1.44%. Perhaps a bit surprising given that they raised their guidance on strong diabetes drug sales and posted a 19% rise in Q2 net profits. But you've got to remember the shares have been up 57% so far year to date. So I think this is probably a case of being better to travel than to arrive.
All the good news being priced in.
I think that's correct, yeah.
Let's move on to M&A, rumours and movers.
Okay, well, you can't seem to keep activist fund managers out of the news at the moment, and we've got a story concerning another one. So Pershing Square Capital, run by Bill Ackman, has taken a $5.5 billion stake in Oreo and Ritz biscuit maker Mondelez. That's ticker MDLZ in the US. They're trading around $50 pre-market, up by about 8%. Wow. So that's about a 7.5% stake in the company that Bill Ackman's taken, and that includes some stock, some options, and some CFDs and forward contracts. He's likely to push for faster revenue growth, cost cuts, or an outright trade sale of the business. Okay. The one barrier to an outright trade sale really would be Mondelez's significant market cap, which is around $73 billion US. So it's probably beyond the reach of many players. Private equity might get involved, but one trade name that could be interested or could perhaps rustle up the cash is Kraft Heinz. That's ticker KHC. They've got a $97 billion market cap, so it's about a third bigger, and it has been mentioned by some punters as a candidate. It's quite ironic, of course, though, that Kraft Foods was spun out of Mondelez in 2012 and was acquired by Heinz in a deal backed by Warren Buffett and 3G Capital in Brazil. Now, they did very well out of that acquisition, and one wonders if they could be talked back to the table to have a tilt at Mondelez as well. So one to watch. I don't imagine that the management will do anything immediately, but it's a story that's going to develop, I think, over the coming weeks.
Understood. Let's take a look at US data points to keep an eye on today.
There's only really one data item of note, and although we wouldn't give it too much credence on 3 out of 4 weeks, it's a payrolls week, so it suddenly comes sharply into focus, and that is the weekly jobless claims. A forecast for 263,000 new claims versus the prior read of 267,000. But we saw a very weak ADP private sector payroll number on Tuesday, and just wondering if that's an early signal to a surprise, both in this number, to the downside that is, and to the non-farm payrolls tomorrow.
Tomorrow, understood. Okay, so let's take a look at the US pre-market movers and some chart points on the cash markets.
Okay, in terms of pre-market movers, the first stock that's taken my eye today is GoDaddy Inc. That's ticker GDDY, $27.25, down around 7.8% pre-market. They guided lower last night on current quarter revenues, and they guided below analyst expectations. It's never good to do that. So as ever, the market's voted with its feet there, and they could well weaken in proper trade further. Then Weight Watchers, WTW, beloved of ladies everywhere, $5.15, up around 15.2%, raising guidance above the top end of analyst expectations. Quite simply, they've been able to do that. Having said that, that might sound good, but you've got to remember that the stock has collapsed from $19 since February, so they've been losing weight faster than their customers. The question is now, can they actually turn that whole business around? The initial omens look good, but I think they've got to deliver, on the execution over the longer term.
And the chart points for today? Okay,
well, FTSE pretty nonplussed really by the Bank of England announcement. So 66.15, that's meant to say. My apologies on the downside. Plays
67.55 the upside.
Yep.
You traded down to 6,700, again a round number, and it's just gone into positive territory.
Yes, yeah. I think maybe people are still taking time to digest. Remember, you've got lots of data. You've literally only got 45 minutes to get your head around it, and then the press conference is about to start. So probably erring on the side of caution. The DAX now, we play 11,600 by 11,670. Euro dollar. We'll just do the finish off the equities first, shall we? The S&P 2095 plays 2113 is our range there, and in the Dow 17,495 plays 17,599. We just adjusted the levels slightly there, but both US indices do feel pretty range bound at the moment. Again, probably waiting on the data over the next 2 days. So now we can move on to the currencies. Euro US dollar 108.70 is our downside level, plays 109.20 to the upside. In Aussie Aussie US dollar 73.09 plays 73.51. As I said, that the Aussie took that unemployment number pretty well. Dollar yen, yes, we've weakened again here. The yen creeping back above 124, so as we expected, 124.65 to the downside, plays 125.00 on the upside, and I would expect it to test up to that figure in the not too distant future. And in cable, hard to pick a downside level this morning, or after the Bank of England news anyway, but we've gone with 154.70. That may hold, but if it has been taken out whilst we've been on air, there are supports not too far below. And then on the upside, if we're going to rally from that sell-off, we need to really take out 155.57 to get back to where we were.
I was going to say that 108 area on the euro dollar is a massive chart level, I think. I'm sure the sellers will return on sort of any close below that area.
108.50, 60 and 70 were all levels before that we tested down to before the last big spike higher. So I guess there'll be plenty of interest around that area again. Yeah,
understood. Okay, Darren Sinden, market commentator, Admiral Markets. Thank you for the Wall Street crossover show. We'll see you same time tomorrow, 1 p.m. That wraps us up. Have a good day. See you tomorrow. Thank you.